What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, double smash that like button for me. Double smash that like button for me. Also, hit that post notification bell. Little bell that you go ding. Hit that post notification bell, ding, so that you're notified every time I upload a new video or I start a new live stream. Hey, that's the way you get a double dose, triple dose, quadruple dose of Richard Faines. You got to hit that little notification bell, that little YouTube notification bell. Hit that for me so that you're notified, so that you don't miss none of the content. Because I'm telling you guys, over these next 12 months, you don't want to miss any of the content. We're going to be talking about big boy blue chip paper assets, big boy blue chip real estate. We're going to talk about real estate a little bit today, and we ain't talked about real estate in, 6 months? A year? We ain't really talked about no real estate. Why? Because interest rates were too high. But guess what? Interest rates are coming down. Yes, sir, it started yesterday. 50 basis point rate cut with another 150 to come over the next 12 to 18 months. Matter of fact, we got another 50 basis points coming this year. We're going to have a total of 100 basis point rate cut off the Fed funds rate this year, and another hundo in 2025, with a total of 200. Guess what that's going to do to mortgage rates? It's already happening, guys. I keep telling y'all, when rates go down, assets go up. I don't care if it's real estate, paper assets, crypto, gold, silver, I don't care what it is. Pokemon card collection. Your Pokemon card collection gonna go up when interest rates go down. That's right. That's right. I don't care what kind of collection you have of something of value. When rates go down, it typically goes up. That includes you Pokemon card collectors. So guess what? All that money you done spent on your Pokemon card collection is getting ready to get a little boost in value. I know some of y'all love that, boy. I know y'all got some Pokemon card collectors out there. Come on now. Y'all ain't gonna admit to it. Drop down in the comment. Drop in the chat if you're a Pokemon card collector. Come on now, be honest. Y'all ain't got to feel bad about it. I know some of you soybean billionaires, y'all got a secret Pokemon collection you got hid in your panic room in your house. Come on now, be honest. It's okay. So yeah, we got a lot to cover today. First course of action. I want all of my wealth builders who are in the live chat to please stand up. Y'all need to be my moderators for today. Keep these soybean billionaires in check. So for all my wealth builders who are in the chat, I want y'all to please identify yourself as wealth builders, and then make sure you please moderate the chat to keep these soybean billionaires and their minions in line while we get through this content and help people learn something today so that they can collapse time frames and get to the pot of gold at the end of the rainbow. Do me that big favor. All of my wealth builders that are in the chat, please be moderators today. Keep these folks in line, okay? But keep it clean. I don't want no crazy stuff going on now. Try to keep it clean, especially my wealth builders. Keep it clean. I can't control the rest of these people in here. And I ain't trying to control my wealth builders either, but my wealth builders understand what I'm trying to get accomplished. So they're going to be the moderators today for me. So my wealth builders are going to take care of the live chat and keep things in order while I try to give you guys this information that I think is extremely important towards you building your wealth. First course of action, though, you guys know, you got to get down to the description box and click on the Richard Faines Millionaire Mentor Instagram link. Give me a follow on Instagram. Guys, I got a lot of things popping on Instagram. I got some stuff coming that I'm going to be sharing that you're not going to see on the YouTube channel. So if you want to keep up with me when I'm not on YouTube, get down in the description box and sign up and follow me on Instagram and send me a DM to let me know you're rocking with me so that I can say thank you. Next course of action is the website, www.richardfain.net. Second link down in the description box. Website's been up and running about 5 months. We've had over 400,000 of you guys go check out the website. So thank you. You guys have been so fantastic by going over and supporting the website and checking it out and buying digital products. And hey man, thank you. I appreciate you guys supporting me just like I support you. So thank you for being a part of this wonderful family that we have called the Wealth Builders. Wonderful family that we have called the Wealth Builders over on the Patreon website. Through my website, you can go to www.richardfain.net, second link down in the description box, and you're going to see a membership button or a join button. You can go over and hit that, and it'll take you over to Patreon, and you can join the fastest growing financial community on Patreon. It's called the Wealth Builders. And we got over 1,000 people in there, almost 1,100. Right now, almost 1,100 people in there. And we'd love to have you over there. And here's the thing, guys. You get out of the Wealth Builders what you put in. So if you come over there, you sign up, you don't do nothing, you don't contribute, you don't try to be you don't give good nuggets, you don't tell people what you're doing, you don't ask questions, you get nothing out of it. The whole key is you got to go over there and leverage the other people in the community that may have a better knowledge than you have in certain areas of investing. Maybe you have a better knowledge in certain areas than they have. That's why it's called a community, because we help each other. There's no experts over there. We're all just regular people trying to do our very best to get to our pot of gold at the end of the rainbow so we can take care of ourselves and our family. That's all we're trying to do, right? We're not trying to, we're not going to be over there, antagonizing people and being sarcastic and saying negative stuff. No. I don't play that. Number one, I don't play that. If you're going to be over in the Wealth Builders, you're going to be positive and you're going to have something positive to contribute to help people build wealth. If you ain't doing those things, you ain't going to be over there, because I'm there every day, all day. If you want to be a part of that type of family, guys, that type of financial family, get yourself over to the website, click on that join button, click on that membership button. We're not going to have any of that stupid stuff over there. It's all about educating people, having a good attitude, being positive, traditional investing, buy and hold, big boy blue chip, long term. That's it. We ain't selling nothing to nobody over there. We're not going to be over there being negative, not having it. Like I told y'all, I don't care if it's me and one person in there, it's going to be positive. So if you want to join that positivity, get yourself out this darkness and find you some light, come over to the private mentorship club, the Wealth Builders, and join us. We'd love to have you. Well, Moomoo, self-directed brokerage app that I'm using over the next 10 years to 10x the net worth. Get down in the description box. I walked you guys through a little scenario yesterday where you can actually build a side hustle out of the Moomoo brokerage app. Some of y'all paid attention to that because I got some questions on it. I got a few DMs. I got a few emails. Richard, hey, what's up with that side hustle thing with Moomoo? Can you send me more information on that? 90% of y'all missed it. 90% of y'all missed it. You're too busy in here, just not paying attention, just too busy in the live chat, doing whatever you do. And you just missed the whole side hustle thing. You just missed the whole, I can get free stocks by referring the Moomoo brokerage app to other family and friends and church members and other people in my circle, in my network. Yeah, you can make a bunch of money, free stocks from Moomoo. They're going to give you free stocks, publicly traded companies, for just sharing the idea, just asking other people to try the app. Not only do you get referral stocks, but they get free stocks too when they make a deposit. A lot of y'all missed that, but please don't miss it. Get down to the description box and click on the Moomoo link, first of all, for you and your family, so that you can get up to 15 free stocks. You put $100 in there, you're going to get 5 free stocks. Now that $100 doesn't buy 5 free stocks. They're free. Then you take the $100 and go buy you something else to build your wealth. The $100 is just a qualifier to make sure that you're serious about using their app. Then they give you the 5 free stocks. If you put $1,000 in there, they know you're more serious. They give you 15 free stocks. Now you take the $1,000 and you go do what I'm getting ready to walk you through. I'm getting ready to walk you through. I told you yesterday what was going to happen to the S&P 500. I told you what history says the S&P 500 does after rates are reduced. I told y'all that yesterday. Guess what it started out today? Over 5,700 points. I think that's an all-time record. I believe it is. I believe that's an all-time record for the S&P. Somebody do me a fact check and do the research on this. And when I say research, I mean Google. Right now, it's at 5,701.23. It's up almost 83. Matter of fact, it's at 5,712, almost 5,713, which represents almost a 95-point jump. See, what did I try to tell y'all yesterday? See, this is where we miss the boat sometimes. I tried to tell y'all the last 2 rate cuts, what the S&P 500 did in the next 12 months. Guess what it's doing today? Now, again, I don't have a crystal ball. I don't know what it'll end up at. But I can tell you what it's at right now today. Right now today, it's at 57.12, which I believe is a new all-time high. I believe it is. On our way to 6,000. Could be 6,000 by the end of this year. What did it start out at the beginning of the year? 4,700 points. And it's at 5,700 points now. Had you been paying attention and listening, you'd be up 1,000 points on the S&P right now. But see, this is what I try to tell y'all. But you're too busy in the live chat, you know, getting confused by the live chat, instead of listening and then going and execute. See, same thing yesterday about Nvidia. I get a quick little DM. Oh, Nvidia's down to 113 a share. I thought it was going to bounce after the Fed cut rates. Can't see the forest for the trees. Just don't even know what's going on right now. No clue. What I'm telling you guys is it's a proven fact that growth stocks go higher when rates go down. See, a lot of y'all cannot see the forest for the trees because why? You focused on me trying to bring me down. You can't bring me down. I keep telling y'all that. You can't bring me down, so stop trying to focus on bringing me down and really refocus your energy on bringing you up. See, a lot of y'all got all of y'all energy focused on trying to bring me down while I'm prospering. I'm having a better year in 2024 than I've had at any point on YouTube. I'm making more money in 2024 than I've made in the previous 4 years on YouTube and all my other related activities. And I done made a bunch of money. I'm making more money this year. So you can't stop my show. What you should be doing is refocusing that energy, that dark energy you're trying to put on me. You need to refocus it and turn it into light energy and bring you up. I'm trying to show you how to do that if you would listen. And I know that's a small percentage of y'all. I know the majority of you guys are here to learn and to listen and grow. So let's get back on that. As I told y'all guys, when interest rates go down, it's a stimulus package to the economy. It's a stimulus package. That's the reason why when rates go down, you're starting to see mortgage rates, 30-year fixed rate mortgage rates, guys. You're starting to see these mortgage rates go down now. And guess what that's going to do? I keep telling y'all when interest rates come down, it's a stimulus package for the economy. I'm going to tell you what's going to happen in the housing market, guys. As these rates, now you already got to, let me just run this by you real quick. Let me just tell you what I'm talking about here, because some of y'all think I'm jiving around. Let me show you what I'm talking about. If you look, first before I do that, let me finish my thought on Moomoo. Listen, guys, get down to that description box and click on that Moomoo link. You're not going to be able to take advantage of any of this unless you got a good world-class brokerage app. Moomoo is my brokerage app of choice, my primary brokerage app that I use. I started to tell you guys, they're going to give you up to 15 free stocks if you try out their brokerage app. You put $1,000 in, they give you 15 free stocks. You put $100 in, they give you 5 free stocks. And then if you don't know how to use the Moomoo brokerage app, if you don't know how to use any of these online brokerage apps, not any of them, but Moomoo, send me an email through my website, www.richardfain.net. Send me an email through my website and let me know you've opened the Moomoo account, you've funded it, and you need the tutorial videos. And then I'm gonna also send you my blueprint videos to show you everything that I'm buying. I'm not a financial advisor. I can't tell you what to buy. I can't tell you what to sell. But what I can do is tell you what I'm buying and what I'm selling. And if you want to copy the plan, ain't no law against you copying the plan as long as you know that's your decision. Not my decision, your decision. But you can copy my plan if you want to. What I can tell you about my plan, I'm up about 30% this year on my plan. I'm up about 30%. That's good enough for me, guys, because see, I'm a long-term guy. I'm going to compound that out over 10 years, and that's a lot of money. Plus, I put a lot of money in my investments. So 30% on what I'm putting in my investments, I'm going to be okay. So my plan works. So if you want to copy my plan, have at it, or go create your own plan. That's up to you. But I will send you my blueprint, my wealth transfer blueprint video, and I'll send you the tutorial videos for Moomoo. So if you want to go ahead and get this journey going, because I'm telling you, the journey starts right now, guys. Right now is where you get in, where you fit in right now. Not 12 months from now. You're going to be missed 12 months of wealth. Right now is the time. Okay? So get down in the description box and click on that Moomoo link and get started. Get your brokerage account set up, put your money in there, get your free stocks, send me the email, and get going. And then just plug into these videos, these live streams every day. You'll know what to do, because I'm going to tell you what I'm doing. And then if you want to copy that plan, copy it. I tell people that all the time. Guys, I can't sit here and create a plan for you. No, what you need to do is watch my YouTube channel and just do my plan. Or learn enough to go out and create your own plan. I can't sit down and create a plan for you. I'm not a financial advisor, nor do I want to be. What do I want to be a financial advisor for and go through all of that crap? I don't. All I want to do is build my wealth. I don't need a financial advisor to build my wealth. Maybe you do, and you can go get you one, but I'm not one. Now, if you want to copy my plan and plug into these YouTube videos every day and copy the plan, that's what I recommend you do. All right, let's move on to mortgage rates real quick, and then we're going to dive into some more stuff. But I want to paint this picture for you because I think what you got coming up here, guys, not only paper assets, now we're starting to get what? Real estate back into play. And you guys know that have rocked with me and followed me. Those are the two main assets that I bought for 25 years to build my wealth. I bought single family homes, one every 2 years. And I borrowed 80% of the money from the bank every time. And I took the other 15 to 20% of the money from real estate that I already owned in the form of taking equity lines on all of my real estate. I had equity lines on all of my properties. I would use those equity lines as down payment money for the next property. I'd go to the bank and get 80% loan from the bank. OPM. 100% other people's money. I was buying real estate every 2 years. And I built a real estate portfolio using that technique. But what was really, really, really instrumental in me building that real estate portfolio was low rates. Reason I haven't bought real estate over the last 2 years, guys, is why? Because interest rates have been above 7%. I can't make no money because I borrow 100% of my money in the form of equity lines and my first mortgage with the bank. I can't make no money when equity lines are prime plus 3 and they're over 11%. I can't make no money when 30-year fixed rate mortgage rates are over 7%. I can't make no money in real estate. But guess what's happening? The rates getting ready to come down. The Fed just moved the Fed funds rate down by 50 basis points. So guess what that's going to do to the prime rate? it moves the prime rate down by 50 basis points because the prime rate follows the Fed funds rate. The Fed funds rate is what banks borrow money between each other. The prime rate is what banks lend you money at. So when the Fed funds rate moves down 50 basis points, prime rate moves down 50 basis points. When the Fed funds rate moves down 200 basis points, the prime rate moves down 200 basis points. That makes equity lines cheaper, but it also makes 30-year fixed rate mortgage cheaper. Here we go. How do I know? It's already started. Mortgage interest rates today. Rates low following supersized Fed cut. That's right. That's right. Mortgage rates are lower. Yes, they are. And they're going to continue to go lower. They're going to continue to go lower, guys. And that's going to introduce what? A brand new money supply into our economy. And guess what's going to happen to all that pent up demand people have to want to buy them a new home? They finna go shopping. When these rates, check this out. Average 30-year mortgage rates are hovering around 5.60%. When the last time you saw a 30-year fixed rate mortgage at 5.60%? It's been a while. It's probably been what, 2021? Maybe the beginning of middle 22, they started going up because that's when the Fed started jacking short-term rates in March of 22. So after March of 22, rates on mortgages went through the roof with the short-term rate. Well, short-term rate ain't the same as the 30-year fixed rate, Richard. I know for all you wanna-be economists out there and you wanna-be Fed guys out there, I get it. But indirectly, they do affect the 30-year rate. Yeah, they do. Why do you think they're coming down right now? They do, indirectly. Not directly, but indirectly, short-term rates affect long-term rates. Right? So all of you people in here that think y'all are, these world-renowned economists, why are you in here? I'm telling you, short-term rates affect long-term rates. Here we go. Average 30-year rates are hovering around 5.6%. So what do you think is going to happen? Another 150 basis points get shut down on the short-term rates. What do you think that's going to do to long-term rates? They're going to keep coming down, guys. And as they come down, what you're going to start seeing is home sales start ticking up. Remember, over the last 2-3 years, home sales have been in the toilet. They've been decreasing every year since the pandemic. One year we had 4 million. What was it? I think it was 2020. We had we had about 5 million sales in, and it just kept coming down. And then in 2024, it was projected to be somewhere in that 3 million home sales, which is the lowest point it's been since the pandemic. What you're going to see is them home sales are going to start going back up. You're going to start seeing the housing market start to get a bounce with these rates coming down because you got a lot of people on the sideline couldn't afford a mortgage payment at 7%, but they can afford a mortgage payment at 5.60, 5.50, 5%, 4.99. Oh yeah, that's coming. And when it does, real estate prices are going to start going back up. Why? It's already widely known, guys, we don't have enough supply. What do you think is going to happen? We don't have enough supply at the 7% interest rate. So what do you think is going to happen when rates come down under 5%? And they're coming, guys. They're already at 5.6. It's coming. What do you think is going to happen to supply? To demand. And we already don't have enough supply right now. So home prices are going to go up and home sales are going to go up. Because now, over the last 2 years, as all these people who wanted to buy homes and could not afford to buy them at 7%, they've been pent up on the sideline. Just pent up on the sideline, ready to go, waiting on rates to come down. Pent up on the sideline, waiting on rates, and then all of a sudden you open the gate for them, and the stampede comes. That's right. So what I'm telling you is an opportunity to buy real estate to put in the portfolio to diversify yourself a little bit is coming. It's getting ready to happen. If I'm somebody looking to buy real estate right now, looking to diversify and get into real estate, I'd be buying right now. Because I'm telling you, as rates come down, prices are going to go up. I keep telling y'all, rates come down, assets go up. I'm just telling you, these prices on these homes and these rental properties are going to go up as rates come down. So right now is a great opportunity for somebody that wants to buy real estate and put it in the portfolio to sort of hedge against their stock portfolio. Let me get me some real estate in here to get me some rental income, and I'll appreciate and value because I'm buying a good neighborhood that people have a desire to live. Is an opportunity right now before these rates get lower. Now you gotta, obviously you gotta have decent credit. You gotta have some down payment money. You gotta have proof of income. You can't walk in there, oh yeah, I just got laid off last week, but I wanna go ahead and be a real estate investor. How much money can I borrow? You can borrow zero. Nobody gonna give you no loan if you ain't got no proven way to pay them back, just in case you ain't got a tenant to put in that property. How you gonna pay them back if you don't get a tenant? You got to have some type of asset, some type of income coming in, just in case you don't have a tenant paying you. Ain't nobody going to lend you money for nothing. And they can't guarantee they're going to get paid back. So all I'm telling you is if you got verifiable income, if you got down payment money, if you got good credit, think about buying some real estate. I know a lot of y'all have emailed me over the last 2 years about real estate, wanting to be real estate investors. It's not that hard, guys. You don't need to go buy no course. You don't need to partner with nobody. No, all you need is those 3 things I just told you. Verifiable income through your tax returns. Oh, no, I made $100,000 last year, but I didn't put it on the tax return. So then you made zero. In the eyes of the bank, they don't care about you, your wheeling and dealings, and if it don't hit your tax return, it ain't income. So you got to have verifiable income through your tax return, not no, this is, here it is. I wrote it all down on a spreadsheet. Here's my income. No, that's a zero. Nobody's going to give you credit for that. Put it on your tax return. That's credit. That's verifiable income when it's on the tax return. Only people get away with not having verifiable income is rich people. Because rich people can show them a brokerage statement with 25, 30, 40, $50 million in it. They don't need no income. That's the income. You don't have that. So you got to have income on your tax return, right? Not this, oh yeah, on my side hustle, I don't claim it, but I make $50,000 a year on my side hustle, but I don't claim it. Well, then you ain't gonna claim it as income for you when you go to the bank to get a loan. These people want verified income through your tax returns. Plus, you got to have down payment money. My down payment money came from equity lines that I would put on my rental properties. And then I would go to those equity lines, take the down payment money, and then what I would do is I'd be out here on my side hustles, luxury watch sales, eBay stores. I would do these side hustles, and then I'd pay the equity lines down with the side hustle money and get ready for the next property. That's what I would do. So none of my earned income I didn't spend on rental properties. I took that money and put it in stocks. I took care of my family, paid my mortgage. My side hustles, I put into stocks and I paid off the equity line so that they were ready to go for the next property. That's what I did for 25 years buying real estate, and I'll do it again. As soon as these rates come down, I'm gonna go out and buy some more rental properties. They ain't low enough for me yet, but they're getting there. I'm a patient guy. I just keep buying big boy blue chip paper assets until it's time. See, y'all get hung up in this, oh, I gotta buy this, I gotta do, no. I'm gonna go wherever I can make money. So if that's a business, if that's paper assets, if that's, it doesn't matter to me. Wherever I can make the most money on my assets, that's where I go. When real estate gets down, and it's coming, baby, it's coming. When them rates get down, I need them in that 3.5% range, honestly, for me. But for some people, 5.60 as opposed to 7%, 7.5%, almost, not almost, over 8% at one point over the last several years. We had interest rates at 8%, guys. They're down all the way to 5.60, and they're gonna keep coming down. My point is this, as I told y'all yesterday, rates come down, assets go up. Go look at the history of assets, man. I keep telling y'all, when rates come down, that's a stimulus package to the economy. It's a stimulus package. It's just like them cutting a stimulus check during the pandemic. It's a stimulus package. Now, what they did during the pandemic, they double stimulus, triple stimulus. One, they gave you the check for free. Two, they lowered rates to zero, second stimulus. Three, they came out with the PPP. Four, they gave you unemployment. They gave you like 4 stimulus packages during the pandemic. That's the only thing how most of us survived. If we didn't have them 4 stimulus packages, we wouldn't have survived. Now, all of a sudden, things are better. The economy is better. The Federal Reserve has orchestrated a soft landing. We've brought inflation down. We didn't ruin the economy, right? Now it's time to start lowering these rates to neutral. Not to zero, but to neutral. Neutral is going to be in that 3.75, 3.5, 3.7. That's going to be neutral. That's 200 basis points off of what it is today. So in that 3.5, 3.75 range. It's going to neutral over the next 12 to 18 months. 200 basis points. That's where it's going to. So what do you think interest rates will be in a year? I think interest rates will be in that 4 to 4.5 range in a year. Sometime in 2025, they'll be down below 4.5%. 30-year fixed rate mortgage. That's a stimulus package. That's going to reignite the housing market. Yes, it is. And it's going to also allow companies to expand again. They're going to go borrow money, and they're going to take that money and they're going to expand. And most of those companies that will be doing that are going to be considered growth companies. And why would that help a company like Nvidia? Well, I'll tell you why. As all of these growth companies start to be able to borrow money cheap, as these rates come down, they're going to go to their banks, they're going to go to their lenders, and they're going to start borrowing this money. And guess what they're going to do with that money? They're going to put it into chips. They're going to put it into artificial intelligence. And y'all already know who the top dog in artificial intelligence. The top dog is Nvidia. So Nvidia is going to really do well, guys, revenue-wise. Why? Because the cheaper people can borrow money, companies can borrow money, they're going to take that money and put it into their growth. And part of their growth strategy is artificial intelligence. So all of your semiconductors are going to benefit if they're good semiconductors. The main one who will benefit the most is going to be Nvidia because they're the top dog. They got the best chips in the world. They're going to benefit the most. Their stock price will benefit the most. At some point, Wall Street aliens won't be able to manipulate it as these rates come down because there are going to be so many people, companies pouring money into. Here's what I'm trying to get y'all to understand. Let's talk about this real quick. This is where this thing is going for Nvidia. If you guys would pay attention to this company and see what they're doing, you'll see how they're positioning themselves to just go to a whole nother level. Here's another partnership that they're starting to maneuver into. Here it is. What Salesforce and Nvidia's AI partnership means for business. Yes, they're partnering with Salesforce. Go do your research. And when I say research, I mean Google. But I'm going to give you a little bit of this, but you go do the rest of it. But see, these are the partnerships, guys, these people. And people are coming to them. Why? 900-pound gorilla. Top dog. Everybody want to be touched by the gold standard. Even Salesforce. They want a part of the gold standard. Come on, man. Here we go. Here we go. Salesforce and Nvidia have announced a collaboration to develop advanced AI capabilities, transforming customer and employee experiences. I keep telling y'all, oh, it's $113 a share. Should I wait till it go down to $110 a share? It's just, why? But do that if that's what you want to do. I ain't got nothing to do with that, right? I ain't got nothing to do with that. You do whatever you feel like you need to do. I'm trying to paint this picture of a bigger picture. I'm trying to paint you a picture of a huge, enormous company who everybody wants to partner with. Why? Because of the top dog. And they got one of the most genius CEOs in our lifetime heading the company. Just trying to give you a little bit of what's to come, guys. Just showing you how I think this stock gets to $1,000 a share. I don't care what Wall Street says. I don't care what nobody says. This is what I believe, and ain't nobody gonna change my mind. I think it gets to $1,000 a share because of these types of partnerships and collaborations. Here we go. Companies globally are grappling with integrating AI into their operations. A challenge that's proving both complex and costly. To help businesses overcome this challenge, global CRM leader Salesforce and Nvidia have announced a strategic partnership that aims to redefine the capabilities of AI in enterprise software. As AI capabilities grow, so do customer expectations. What's happening here, guys? See, you got two companies that see a problem that needs solving. What do I tell y'all about business all the time? I tell y'all, if you're going to start a business, the first thing you got to figure out is there a problem out there that I can solve with my solution? See, that's business. You got to go find a problem people have, and then you got to come up with a viable solution to solve that problem. Make it easier for them. That's what these guys are doing. They've identified the problem, integrating AI into operations. How do these smaller companies who don't have the wingspan of a hyperscaler, they don't have the wingspan of a mega cap, all the money in the world, no limit on the money that they can spend on CapEx. Only a few companies have that, guys. Hyperscalers, mega caps. The rest of these companies don't have that capability. So guess what Nvidia and Salesforce is getting ready to do? Let's collaborate and make this thing easier for them. We're going to come up with a solution to solve their problem. Yes, sirski. That's just a new revenue source. I keep telling y'all, that's just a new revenue source. That's all they're doing. They're going out getting the best of the best, and they're partnering with them to come up with solutions to solve problems. Y'all will catch on to this at some point. Somebody gonna catch on to this at some point. As AI capabilities grow, so do customer expectations. Businesses are under pressure to provide more personalized, efficient services while managing ever-increasing volumes of data. You ever heard of the internet? You ever heard of 4.5 billion people having access to it? Do you know what that creates on a global scale? The opportunity. Do you know there are 8 billion people in this world? There's an opportunity to bring on another 3.5 billion people to the internet. Do you know what capabilities you got to have as a company to be able to tap into that? You need people like Nvidia. You need companies like Salesforce to make it easier for you, so you don't have to do all the R&D and spend all the money. You'll just pay them to do it. Here's some money for your solution. We'll integrate it, and we're gonna go on about our business. That just saved us millions and millions and millions and millions and millions of dollars. Some of y'all gonna catch on to this in a second, what's really getting ready to happen here. The Salesforce Nvidia collaboration aims to tackle these challenges head on by combining Salesforce's deep expertise in CRM and enterprise software with Nvidia's prowess in AI and high-performance computing. The two companies are positioning themselves to offer solutions that will go beyond current AI capabilities. Come on, man. I keep telling y'all, you got to get out of this short-term thinking and replace that with long-term thinking. Stop with this short-term vision. Replace that with a long-term vision. This company is going to be the greatest company this world has ever seen. That's my opinion. And I put my money where my mouth is. I'm trying to walk you through, guys, why this company is going to be $1,000 a share again. In my opinion, I see the difference between me and some of y'all. I don't care what the Wall Street aliens think. I don't care what another YouTuber thinks. All I care about is what I think, because it's my money. If I win, that's on me. If I lose, that's on me. I ain't looking to blame nobody for nothing. But what I believe in, I believe in. Either you stand for something or you fall for anything. See, I stand for something in my life. I stand for something in my wealth building journey. And I'll take full responsibility either way it goes. See, that's what big boys do. That's what big girls do, right? That's what we do. Let's move on. Let's move on. So the Salesforce Nvidia collaboration aims to tackle these challenges head on by combining Salesforce's deep expertise in CRM and enterprise software with Nvidia's prowess in AI and high-performance computing. The two companies are positioning themselves to offer solutions that go beyond current AI capabilities. What did I tell y'all? Find a problem that needs solving, and what do? Bring a solution that solves that problem. That's all these guys are doing. They've identified a problem, because like I told y'all, everybody are not hyperscalers. Everybody are not mega caps. Matter of fact, 99% of the companies out there are not any of those. But they still have problems they need solved when it comes to AI. So they go to a company like Nvidia and Salesforce, get together and say, you know something, we're going to offer these companies a solution that can solve their problem. Bingo. Bingo. And that's exactly what's happening. Their end goal is to develop a new generation of AI agents and avatars that can operate autonomously, understand complex business texts, and interact with humans in more natural, intuitive ways. Come on, man. Come on, man. I mean, just that right there got goosebumps on me. Just that little piece, that one sentence right there says, I'm all in. I'm all in. Boy, oh Lord. I may have to, listen, I'm gonna put Salesforce on the short list. I know I said I wasn't buying no more individual stocks, but guys, I can't pass this up. I mean, come on, man. If these guys get this right, do you know what that's going to do to Salesforce stock? Last time I checked, it was about $260 a share. But do you know what if they get this thing right, do you know what that's going to do to Salesforce stock? Do you know what it's going to do to, oh my goodness. So Salesforce, okay, I ain't going down that rabbit hole right now. Oh, it's on the short list. It's on the short list. Let's keep moving. I'm not going down that rabbit hole right now and get distracted. Let me stay on task here. As Mark Benioff, chair and CEO of Salesforce, says, together with Nvidia, we're leading the third wave of AI revolution. Hold up. What have I been telling y'all? We got 4 waves of AI, right? We had the infant stage. We're currently in the toddler stage. This third wave he's talking about is the teenage, and then the adult. I like that. So Mark Benioff, chair and CEO of Salesforce, says together with Nvidia, we're leading the third wave of AI revolution, moving beyond co-pilots to humans and intelligent agents working seamlessly to drive customer success. Salesforce and Nvidia's partnership. The partnership aims to leverage Nvidia's expertise. We talked about that. So there it is, guys. We're done down that rabbit hole. I just wanted to point out to you guys why this company gets to $1,000 a share by 2030. I just wanted to point out this is one of the many partnerships these guys has, guys. You got to go do your research on this company. That's why I tell people all the time, y'all want to listen to people on the news, you want to listen to YouTubers, but you never go to the company's website and really do a deep dive and find out exactly what these people are doing. Some of y'all never do that. You hear somebody say blah, 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 and boom, you go to your brokerage app and there you go to invest in it. You don't know what you're investing in. You have no idea. Just because somebody told you that, that's all you go do. No, you should go to the company's website. You ain't got to be no expert at reading financial statements and all of that stuff. Just go to the company's website and find out what their secret sauce is. Find out what their secret sauce is. What separates them from everybody else in their industry. You should be going to look at that in their website. Oh, golly, I've heard about this company, Nvidia. Now, let me go to their website and see what the secret sauce is. What separates them from all the other semiconductors? What separates them? I want the best of the best. I don't want to be investing in nothing that's not the best of the best in their industry. That's why I don't buy a lot of other semiconductors. I only want the top dog. If you ain't the top dog, not that these other companies won't make money, they will. But I'm one of these guys, I just want to be with the top dog. Period. Okay, no run with that. Now the top dog has stretched out the gold standard arm and linked up with Salesforce. Pretty much the best of the best at what they do in their industry. They're like the top dog. They're like the top dog. So a top dog with a top dog. How you gonna beat that? Two top dogs. Whew, okay. Maybe y'all caught that, maybe you didn't. Maybe you did, maybe you didn't. But back to the mortgage rates real quick, because I want to run you through this real quick on the mortgage rates, and then we're going to move on. We're going to move on. Matter of fact, we're done with mortgage rates. I pretty much going to walk y'all through what I wanted y'all to understand about mortgage rates. You have an opportunity here through the decrease in mortgage rates. It's happening. 5.60 is the average 30-year fixed rate mortgage. Now, of course, that's for owner occupied. That's for somebody that's moving into the house. For somebody that's doing investment, could be slightly higher. But at the end of the day, rates are coming down. No longer this 8% stuff that we had a couple of years ago, or in 23 or late 22, early 20. No more of that. We've come down all the way under 6% for a 30-year fixed rate mortgage. That is good, guys. We're headed in the right direction. My point here is to notify you that these assets go up as rates come down. And the reason assets go up because rates come down is because more people have access to borrow money cheaply, and they borrow it. And either they buy stuff or they invest in assets. That's what they do. Companies use that money to grow, right? Let's take a look at S&P. What's S&P at right now? 5,712.58 points. Today it hit an all-time high, guys. 5723.88. New record all-time high for the S&P. As I told y'all yesterday, and I'm gonna keep reiterating it, rates fall, S&P in the next 12 months goes up. It goes up. And I think it will continue to go up. Now, will it set back, bounce back? Yeah, but it's going to keep going. See, what you got to understand, guys, anytime these things hit an all-time high like it's hit, that tells me it'll go higher. It already went to 57.23 today. Now, if it don't get no higher than that today, I know at some point in the future, it's going to go past 57.23 because it's already done it. It's already done it. Just like with Nvidia, post-split, got to 140 a share, market rejected it. I know at some point, post-split, it will break the 140 barrier or resistance level and keep moving at some point. I think it will do that very soon. That's all I'm saying, guys. Right now, here's a 52-week low, 4103. That was the 52-week low on the S&P, guys. 4103. Today, we hit an all-time high, less than a year later, 5723. Now, what if you would have been invested? What would have happened to your net worth during that 52 weeks? You would have experienced a pretty nice net worth jump. That's the part I try to get you guys about this long-term investing thing, and be patient. Keep doing what you're doing, dollar cost averaging in, and just be patient. The money's there. It's coming. I keep telling y'all the stock market is a continuous bull market. It don't stop. It does have periods of correction and consolidation, but it don't stop. At some point, some of y'all gonna believe that. I'm trying to tell you the thing don't stop. 52 weeks ago, not even 52 weeks ago, it was at 4103. And this was with interest rates at 5.5%. It goes from 4103 to 5723 with interest rates at the highest level they've been in 20 years. It did that. What do you think it's going to do when rates continue to come down over the next 12 months? Some of y'all will catch that. Some of y'all won't. Some of y'all will catch it, some of you won't. So here we go. Let's talk a little bit about what the experts think happened this morning. Why are things bouncing now? Will it last? None of us know. We don't have a crystal ball, but for right now, it's in the green, and it's really, really, really green, like a bright green right now. Let's see what the stock market experts think. Stocks rose Thursday as traders digested. I love the words they use, these experts, man. It is just phenomenal to me. So this is, stocks rose Thursday as traders digested the Federal Reserve's Wednesday decision to lower interest rates by 0.5 percentage point. The Dow jumped 485 points, just like that. Remember yesterday, I think it was down 100 and something. Today, this morning, this morning, it jumped 485 or 1.2. The S&P climbed 1.6. The NAS 2.4. What I've been telling y'all, rates come down, growth stocks go where? Higher. What is the NASDAQ predominantly made up of? Growth stocks. That's why you see a bigger jump in the NAS than you see in everything else, because it's predominantly growth stocks. Growth stocks go up when rates start coming down, because most growth companies borrow money to grow. That's why they're called growth companies. Why are they called growth companies? Well, because they grow. They're trying to grow faster than what? The market. That's why they're called growth companies. If they're not growing faster than the market, they're not growth companies. Growth companies grow faster than the market. And when I say market, I'm talking about the S&P 500. That's my opinion. You come up with your own conclusion. Traders got some validation. I love the way these guys use these words to try to get these Wall Street aliens to try to tell us common folk what the Wall Street aliens are doing. When it's, they got validation, normal people. This is why the Wall Street traders got validation. That's why they're buying now regular common people. Just a joke. Traders got some validation that the Fed was engineering a soft landing for the economy on Thursday as weekly jobless claims fell by 12,000 to 219, which was far below estimates. Well, the weeks leading up to this, it fell. So, I mean, I'm not sure why that surprised them. If you go back and look, it was already falling weeks before the Fed even lowered the thing. So that all of a sudden now, oh, okay, we're on board now. Come on, man. But that's a good thing though, right? That's a good thing that the jobless claims did fall. So that tells us what? It further supports the idea that the labor market isn't so soft that people are losing their jobs. Because if that was the case, guess what would happen? Jobless claims would go up because more people would be filing for unemployment. But since less people are filing for unemployment, that debunks this notion that the economy is headed to a recession because of the softening of the labor market. It debunks that. So the weekly jobless claims fell by 12,000 to 219,000, which was far below estimates. Now they're saying, okay, we believe you, Fed. Yesterday, they didn't believe the Fed, so they sold off. That's what they're saying. But today, we believe you, Fed. We believe you. Okay. Even though Jerome Powell came out yesterday at 2:30 and said there was no problems in the labor market. Now, this is coming from the Federal Reserve, who actually is regulated to mandate maximum employment. That's one of their mandates. They told you this yesterday. You didn't believe them. But now, all of a sudden today, you believe them. Boy, I tell you, boy, they something else. Yesterday, you wouldn't believe the Federal Reserve chairman when he went on national TV and told you there was nothing wrong with the labor market. You didn't believe him. But yet and still today, you believe him. Now you get it. Oh, the weekly jobless claims report came out and it was below estimates. Now I believe him. Right. Tech stocks rallied as the rate cut spurred investors to return to risk-on mood. I don't know what the hell all that means. I guess that means they're ready to get back in stocks again. I guess what all that risk-on mood. I keep telling y'all, this is just goofy terminology that Wall Street aliens and the one percenters be throwing in their articles to confuse people. This risk-on, why not just say something regular that most people can understand? Not these guys. Basically, in a nutshell, they're not ready to get back into tech stocks. Now they're ready to get back into tech stocks. That's why you see tech stocks rallying right now. See, now people are ready these investors are ready to get back into tech stocks. Why? One, rates came down. Two, weekly jobless claims went down. So now they believe the Fed now when the Fed tells them we're not doing this because we think the labor market is weak. We're doing this because it's time to do it. We've orchestrated the soft landing. Now it's time to bring rates to neutral. That's what you do. You don't keep rates elevated when everything you're trying to defeat has been defeated. You didn't bring rates down to neutral. That's all they're doing. And that's what they said yesterday, but they didn't believe them yesterday. Today they believe them. So now they're rotating back in, right, into tech stocks. But goes to continue to support my case that I've been telling you guys all along. When rates come down, growth stocks go higher. So when is and for Richard Fain, if I'm brand new and I'm trying to figure out how do I build my wealth over the next 5 to 10 years, and I went and did me a little research, and my little research I did, and when I say research, I'm talking about Google. I'm talking about the $2 trillion research lab. So when I go to the $2 trillion research lab, and I say to myself, $2 trillion research lab, and when I say $2 trillion research lab, I'm really talking about ChatGPT. ChatGPT, please tell me when the best time to buy growth stocks. And then I give ChatGPT a couple seconds. ChatGPT comes back and says, okay, Richard Fain, here's the best time to buy growth stocks when interest rates come down. What? We just had an interest rate. Let me go get me some growth stocks and just hold them long term. That's it. That's it. That's it. Oh, if I'm brand new and I really don't want to be on the hook. I don't want to be the expert because I'm not an expert. I'm brand new at this and I don't want to be on the hook for making decisions. ChatGPT, if I don't want to buy individual stocks, but I still want to buy growth stocks, what ETFs can I buy? ChatGPT. And guess what ChatGPT gonna do? Boop, 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 boop. 2 seconds, psh, put it on the screen. Well, Richard, if you want to buy growth stocks and you don't want to be buying individual growth stocks, maybe you go buy the S&P 500. Maybe you go find yourself an information technology ETF and let the ETF be the expert. All you got to do is sit back on the beach and drink pina coladas and wait. Wait. Go kick back, get you a good book, get you a cup of coffee, get you a Sprite, get you a pina colada, and go sit on the beach and just enjoy life and let the ETF do its thing. Well, ChatGPT, can I ask you one more question? Well, what has the S&P 500 done after a rate cut in the next 12 months? I don't really want to research that, ChatGPT. Can you go take care of that for me? Well, Richard Fain, yes, I can. Let me go find that answer for you. Beep, 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 beep. Throw it up on the screen. What do you mean, ChatGPT? You mean to tell me the last time rates were cut in March 2020? That the S&P 500 the next 12 months grew by 27%? What do you... in August of 2019 when rates were cut, you mean to tell me in the next 12 months it grew by 10%? Well, golly, thank you, ChatGPT. I think I got all the answers I need. That's it, guys. That's it. So if I don't want to be on the hook picking individual stocks, one of the great things I can do is go find me an S&P 500 ETF that has a historical track record of killing it after rate cuts. And if you don't believe me, go to ChatGPT or Google, $2 trillion research lab, and type that in. It'll give you all the answers I just gave you. How do I know these answers? Because I use the $2 trillion research lab all the time. Pretty simple. And all I got to do is wait. Buy my big boy blue chips, keep buying them, and wait. As these interest rates come down over the next 12 to 18 months, I'm going to develop a lot of net worth. I listened to this song by Future. And don't get me wrong now. Let me tell y'all, Future ain't for the lighthearted, because Future's pretty aggressive. But I like this one song because he be saying in the song, I'm going to get richer and richer. I like that part. I'm going to get richer and richer. And I know a lot of y'all think, oh, man, this guy talks a lot about getting rich. No, I like getting rich. I like being wealthy. It's a tool so that I can control 100% of my time. See, if I don't have wealth and I don't have riches, I control 0% of my time because I got to go to work for somebody who controls me because they pay me. Whoever controls you, pays you. Whoever pays you, controls you. It's the way it works. So if I want to control my own time, 100% of my time, the best thing for me to do is figure out a way I can get wealthy. Now, wealth, the definition of wealth is different for everybody. My definition of wealth is I have enough assets that generate enough income to pay for my lifestyle. That's wealth to me. Wealth to you is going to be totally different. Whatever your wealth definition is, that's up to you. My wealth definition is pretty simple. I want to build enough assets that generate enough passive income to take care of me, and I ain't got to worry about doing anything else for the rest of my life. That's wealth to me. There's no dollar amount on it. It's just, can it pay for my lifestyle? If it doesn't, I keep building the wealth till it can. It's pretty simple. But I like that song by Future. I get richer and richer. I like that. So here's the thing, man. Let's finish this thing up. So tech stocks rallied as rate cuts spurred investors to return to rotate back in to tech. Nvidia, AMD shares popped 5%, 4%. Micron Technology traded more than 2% higher. Other big tech stocks such as Meta and Alphabet advanced 2.4% to 1.9% respectively. Stocks leveraged to lower rates spurring the economy also jumped Thursday morning. Financial agent JP Morgan Chase rose 0.8%. Now, some of y'all will remember where JP came out a few weeks ago and gave forward guidance on revenue for 2025, specifically their net interest revenue or income, that it would be down in 2025. And a lot of y'all saw where the stock declined by a little bit. And I said, when it declined, I said, guys, this is JP Morgan Chase. They're the top dog. They're the #1 bank in America, and they're the 5th largest bank in the world. They will rebound. This is maybe for somebody that wants to diversify and put some financial services companies in their portfolio. This may be one you want to put on the short list. And guess what? JP bounced a little bit. JP was going to come back all along because it's the largest bank in America. And they got a really smart CEO. They were going to bounce back anyways. I just tell y'all guys, these great companies, when they go down in value, man, gobble them up because they're going back up. That's my opinion. I'm not your financial advisor. Do whatever you want to do. Just trying to drop a little pro tip on you from somebody that's been doing this for 30 years. Plus, I bought bank stocks for 25 years. Bank of America, Wells Fargo, I bought a bunch of their stock and made a bunch of money. Why? Because of that same statement I just gave you. When you're the 2nd and 3rd largest bank in the country, your stock price ain't gonna be down forever. Plus, they're gonna pay you a great dividend while you hold your money in the stock. Just a little pro tip from a non-pro. Little pro tip from a non-pro, just a guy that builds wealth and builds it very well. That's all. And I know some of y'all get triggered. Oh, this guy. Yeah, guys, hey, if I don't believe in me, who gonna believe in me? If I don't believe in me and what I'm capable of, who gonna believe in me? See, the most important thing for me is for me to believe in me. I don't care what you believe. I don't care if you believe in me. It's irrelevant to me. What's important to me is that I believe in me. What's important to me is my family believes in me. What's important to me is that my maker, God, Jesus Christ, believes in me. I don't care if anybody outside of them 3 groups, I don't care if none of y'all believe in me. I'm going to still get rich. I'm going to still build wealth because I know what I'm doing. And I'm not afraid to fail. I'm not afraid to fail. I'm not afraid to lose money because I know how to remake it. That's the attitude you should have on your wealth journey. It should. It will serve you well. So let's move on and finish this thing up. The Fed slashed its overnight lending rate, we know that, to 4.75 to 5%. Now, which came as a surprise to some investors who criticized the size of the initial cut. This is the first rate. Okay, clearly we know those that criticized them, they've changed their mind. Less than 24 hours, they've changed their mind. Now, how you gonna criticize somebody and you turn around less than 24 hours, you'd have changed your mind? We criticize them. It's too big of a cut. That means the economy is gonna crash. But 24 hours later, less than 24 hours later, you change your mind. Okay, let's keep moving. This was the best news I've heard from the Fed in years, said Jeremy Siegel, professor at University of Pennsylvania, Wharton School of Business. That's my guy too, by the way. That's one of my guys. Tom Lee, right? Tom Lee. What's my other guy? What's my other guy that I talked about yesterday? Tom Lee. The other guy that I talked about yesterday. Him. I think his name is Nash. And then my guy right here, Jeremy Siegel. Those are my 3 top dogs. What's my guy name yesterday that I talked about? Not Tom Lee, but the other guy. Goodness gracious, I missed him. But those are my 3 guys. So this was the best news I've heard from the Fed in years, said Jeremy Siegel, Wharton School of Business, told CNBC's Squawk Box on Thursday regarding 50 bip interest rate cut. This is fantastic news for the market and great news for the economy. There we go. There we go, guys. I love it. He summed it up perfectly. I can't even, that's a mic, drop the mic. I can't even, he summed it up perfectly. That was totally great news. Totally great news for not only the market, but for the economy. We needed that. And now guess what? Hey, the Democrats get to go into the presidential thing with one under their belt. They can say, hey guys, the economy is great. We orchestrated a soft landing. But if you guys remember, let's go back months. What did I tell y'all what they was going to do in September? Months. I'm talking about like March, April, May. What did I tell you that was going to do in September that the Federal Reserve was going to do? I told y'all they was going to drop these rates before this election. Didn't I tell y'all that? I told y'all the Biden administration ain't no way. Now, again, now it's Kamala Harris. But I knew the Democrats would not let this go into an election without dropping these rates to get one more brownie point. And they got it. Now, I don't know what'll happen. I don't care who wins. That's not my thing. My thing is about building wealth, right? And no matter who's in the White House, I'm going to build my wealth because I'm going to follow the 1%. And I know the 1% controls the White House. So I don't worry about who's sitting in this chair. Who I worry about is who actually controls the person that's sitting in the chair. And that'd be the 1%. So whatever they do, I do. That's simple. So I don't worry about the president because I know the president is controlled by the 1%. They're the puppet master. So if these rates came down, that's because the 1% wanted them to come down. That's why these rates came down. It's because the 1% wanted them to come down. And if I'm not mistaken, guys, and y'all correct me on this or go fact check me. If I'm not mistaken, Federal Reserve Chairman Jerome Powell is a Republican. And if I'm not mistaken, the last Republican president put him in the chair. I don't know. Maybe I'm wrong. I don't know. Y'all go fact check me. I think the last Republican president put Jerome Powell in the chair, and I believe Jerome Powell is a Republican. So everybody who in your party don't mean they like you. So y'all put them little dots together. Put your little dots together. So here we go. What else I wanted to cover with you guys? Let me see what else I wanted to cover. Oh, here it is. Here we go. The stock market. Okay, we're not going to even cover that because I think we've already touched on that. So what I really want to go ahead and do is take a little temperature check and let's see what's going on around the stock market from my favorite companies. Oh, goodness gracious. I see one right here that might be worth tapping into. I see something that might be worth tapping into. Y'all give me a second here. Let's see here. Oh yeah, Rocket Lab. Let's see what Rocket Lab is doing. We'll do a little temperature check real quick. Let's start with a 900-pound gorilla. Ooh, 900-pound gorilla up 119.31. They up $5.94 on the day, guys. Yeah. Sitting at about $2.93 trillion market value. Dan Ives, thank you, Dan. That's it, Dan Ives. That's what I'm talking about. Thank you, whoever that is in the live stream, live chat, the chat. Thank you, Dan Ives. That's who I'm talking about. So my man Dan Ives, Tom Lee, and Jeremy Siegel. Them my three top dogs. Them the guys I listen to. All the rest of them guys, I don't listen to them. Them three. Why do I listen to them three? Because they bulls. I'm a bull. I don't listen to bears. I only listen to bulls. I'm a bull. I only listen to bulls. I don't listen to no bears. You got to listen to whoever you want to, but those are my three bulls. Those are the three bulls I listen to, and all three of them in my gang of five. Yes, they are. All three are in my gang of five. So here we go. Right now, Nvidia Corp is trading at 119.33. Where were they trading at yesterday after close? About 113? Just saying, man. I don't know. All I know is history says in 12 months they be worth more. That's what history says. It's a growth stock. It's a growth stock. So history says they be worth more in 12 months as rates continue to come down. History says growth stocks continue to go up in value. That's not Richard Fain, that's history. Go do your research. And when I say research, y'all know what I'm talking about. Google, ChatGPT. So here we go. Here we go. 119. Can we break 120 today? Can we break 120? Because every dollar this thing goes up, guys, my net worth continues to grow. Right now at $120 a share, I'm sitting like real nice right now on a nice little nest egg. I could just parachute out this thing right now today and put a nice little $250,000 in the bank and just go about my business. But I'm not going to do that. I'm going to hang in here because I'm going to $1,000 a share. Oh, just sell out and then buy back in. I ain't doing all that. Y'all can do that. I ain't doing it. You can do it. I'm going to stay exactly where I'm at and be patient. I'm going to stay right where I'm at and be patient and stop. And I'm not going to sit here and try to time the market. Y'all can time the market, but I'm not. I got bigger plans for my 11,200 shares. Much bigger plans. And it ain't time in the market plans. It's going to be time in the market until this thing gets to $1,000 a share. Then I parachute out. And then I'm going to take the wealth builders and we're going to go have a big old gigantic celebration. Wealth builders. They know what I'm talking about. If the wealth builders are in here, some of them in here, because I got to moderate the chat. So y'all think y'all got me. I went ahead and enlisted my wealth builders to come in here and help me out so that I can just focus on the chat. I mean, since I can focus on the content, I got my wealth builders in here, keeping y'all in line. So thank you, wealth builders, for that. I appreciate y'all. Y'all know, y'all love you so much. Y'all know good and all going well. Y'all have done me a solid, and I appreciate it. Thank you, wealth builders. So yeah, you know, what will Nvidia get to today? I don't know. We'll see. Right now it's up $6. So let's move on. Let's move on. Right now it's up $6. Let's go to Apple. Let's see what Apple. I believe Apple was in the green this morning when I looked at it. Oh yeah, Apple up $8 already. Apple already up $8 a share, guys. Apple's in the Mag 7 DCA, so we're in good shape on that one. So love that. Love that. Apple right now is a $3.48 trillion company. I'm telling you, boy, I got some big boy companies, boy, in my portfolio. I love it. Let's look at Microsoft. See what Microsoft is doing. Microsoft is up by $8.73. They got a $3.27 trillion market value. So I just gave you the 3 top companies in the world. These are the 3 biggest by market cap companies in the world. I just gave them to you, and they're in my portfolio. Yeah, Microsoft is up by $8.77. Let's go on to Meta. Y'all know I love myself some Meta. Big boy blue chip. Mega cap. Ooh. They up by $22 a share, guys. What did I tell y'all about Meta 3 months ago? Wait. August, July, June, May, April. 4 months ago? Remember 4 months ago when Meta came out with it? I'm going to say Q1, but because you know these companies have funny, you know, fiscal years. I'm going to say Q1. It came out with its Q1 numbers in late April. Killed it now, but the market dinged them because they said they were going to buy a lot of chips. They're going to invest a lot of money in AI. And the market, after hours, killed them. Stock price went all the way down to like $425. Y'all remember that 4 months ago, 4 or 5 months ago. After Q1 earnings, not their Q2 earnings that just happened about a month ago. I'm talking about Q1 earnings. They came out, they killed it, but then the CEO, Zuckerberg, said that they were going to be investing a lot of money, a lot more money in AI. Remember that? And then the market got mad and sold them off. Wall Street aliens got mad, sold them off. Stock price went down to like 4.25. And I can remember telling y'all for about a week, I said, listen, guys, Meta won't stay down at 4.25 long. It's going back up. Remember, Meta had hit like prior to the Q1 earnings, earlier, like March, they had hit like an all-time high of like 539. And then all of a sudden, boom, they come out with Q1 earnings. The Wall Street aliens sell out on them. Stock price goes down to about 4.25. Now guess what it's at? You'd be up $125 a share right now had you up $125 a share right now because it's at 550. All right, let's keep moving, man. I keep telling y'all, big boy blue chip, just be patient, get in the market, hold them. But some of y'all listen, a lot of y'all don't listen. I check big boy blue chip, mega caps. But some easy money, just easy money, easy money. Like I said, get down in that description box, guys. Click on that Moomoo link. If you want to take advantage of any of these stocks, my recommendation is get down in the description box, click on the Moomoo link. I'm going through the Mag 7 right now. I've already gave you Nvidia. I've already gave you Apple. I've already gave you Microsoft. I just finished giving you Meta. I've just given you 4 of the mega caps. Listen, man, get down in that description box and click on that Moomoo link and get yourself your brokerage account open today. Put you some money in there and then, consider some of these opportunities that I'm pointing out to you. I'm not telling you need to buy them. I'm just telling you to consider them if you want to build wealth. I keep telling y'all this is a wealth transfer period. I'm trying to show you how to transfer some wealth to yourself. Had you listened to me 5 months ago when I told you put it on the short list, you'd be up $125 a share right now on one of the greatest companies in the world. But, y'all know how it goes. People don't listen. People think they know everything. You're talking about a $1.41 trillion market cap company. It'll be $2 trillion real soon. This stock price it'll probably split again at some time, but it'll keep going up. Meta's going to keep going up, guys. I keep telling you, they're going to keep going up. Meta is going to keep going up. I'm just telling you. I wouldn't be surprised at some point they don't split or they'll be an $800 share stock. I'm telling you. I'm telling you. These people got 2.5 billion people on their platforms. Can you imagine the revenue these people make off advertising with 2.5 billion people on their platforms? Come on, man. This is just, okay, let's move on to Amazon. Like I told y'all, get down to the description box and click on that Moomoo link. Get yourself signed up for Moomoo. Get you up to 15 free stocks when you put $1,000 in your new brokerage account. Get yourself 5 free stocks when you put $100 in your brokerage account. But guys, if you ain't in the game, you can't take advantage of the wealth transfer. You got to get in the game. How do you get in the game? You got to have a brokerage account. You got to have money in your brokerage account. You can't be afraid to execute, and you can't be afraid to wait and be patient. Like I said, man, I make my investments, then I just go kick back on the beach and have me a Sprite or something, Mountain Dew, water, and just relax and just let this thing unfold like it's been doing. Okay, so right now, Amazon is up $2.24. Amazon is a $1.98 trillion company, almost a $2 trillion company. That's Amazon now. Plus, you got Amazon Cloud too. You got their cloud services, right? Got that AWS, which is their cloud service provider. They're considered a hyperscaler. Yeah, just saying, man, What are they up year to date? Just 25%. Stock price is up 25% year to date. I don't know. Maybe that's a not that good for some of y'all. But I don't know why we chasing around with these. Yeah, okay. Again, I'm not your financial advisor. Do whatever you want to do. Let me see here. Let me give you Alphabet, AKA Google, up $3.30 today. Year to date, 17.59% ROI. That's Alphabet. Now let's end the Magnificent Seven with Tesla. Let's see what Tesla's doing today. Tesla's up $15.40. See, Tesla's a $760 billion company. They've already been over 1 trillion before, but they backed down a little bit, but they're trying to get back. Right now, they're up $15.04 today. I don't know about y'all, man. I like those odds. I like everything in the green in my Mag 7 individual stock DCA. Everything's up. Everything. Why? Interest rates are down. And now people understand that the economy is not in trouble. They understand that the labor market is not in trouble. We have orchestrated a soft landing, and you already got the projected numbers for GDP for third quarter, which is about 2.5%. Guess what? Rocket ship back on the launching pad. Rocket ship is back on the launching pad. We got the leak fixed, because remember the first time we tried to take off, we had a leak and we couldn't get out of the Earth's atmosphere. We had to turn back around and land the rocket ship and put it in for service to get some repairs done to it. Now we've gotten them repairs done, and the rocket ship is back on the launching pad. Thanks to Rocket Lab. They helped us out. Rocket Lab came down to the Wealth Builders headquarters. Some of the Rocket Lab engineers came to our headquarters, the Wealth Builders headquarters, which is found on Patreon. That's the Wealth Builders headquarters. So we got a nice headquarters over there on Patreon. 1,000 members, 1,000 plus members. So we brought Rocket Lab in, and we asked Rocket Lab to help us out with our rocket ship. We told them about the last time we tried to take off. We were fully loaded, all the Wealth Builders on the rocket ship. We couldn't get out of the Earth's atmosphere. So we had to turn around and come back, land the rocket ship, abort the mission. So we told them all that. We said, listen, we want to get out of we want to get to the moon, to Uranus this time. We got to get out of the Earth's atmosphere, number one, and we got to keep going. We need y'all to come in and fix our rocket ship and get us right. And lo and behold, the good folks at Rocket Lab, they got the rocket ship back right. It's on the launching pad. And now we just got to come up with the day we're going to take off. So listen, man, all I'm telling you is if you want to be a part of this launch, if you want to be a part of the Wealth Builders and solidify your place on the rocket ship, that's been fixed. No problems with it right now. We did a test launch. Today was a test launch. Looks good, but we're not the real launch yet. We just had a little test launch. If you want to be a part of that, you need to do what you need to do, which is go down to the description box and click on Richard Fain Millionaire Mentor website, www.richardfain.net, and get yourself over to Patreon. How do you get to Patreon? Because when you go to my website, you're going to see something that says membership or join. Click on it, and it'll take you over to Patreon, and then you can join the Wealth Builders, fastest growing financial community on Patreon. And that's where you'll have access to the rocket ship. That's where you're going to have access to all the combined experience of over 1,000 people who are investors. None of us are experts. None of us get it right all the time. But what we've agreed to be is traditional investors, buy and hold, big boy blue chip, long term. Now, of course, just like any community, we have brand new folks who are just getting started in this thing, and they're gung-ho and very excited. And sometimes, we have to, as a group, collectively, we give them this is what our community is about, just to make sure that they in the right place. Because sometimes people come in there and they ain't in the right place, and we have to let them know either this is what we do or, So we're very good at that. We got a great group of people over there. You got a lot of them in the live chat right now moderating, which they've done a wonderful job. And I just want to say a top thank you to them again for doing a wonderful job today and moderating this live chat, moderating the live stream. Thank you so much, Wealth Builders. I'll see you guys in a little bit. So thank you guys today for stopping in. I just wanted to let you know we are getting ready to embark on something special over these next 12 to 18 months. You can already see the groundwork. I've already told you the groundwork has been laid. It's in place, guys. It's in place. All we needed was the last piece to fall into place, which we did today when we got the weekly jobless claim report showing that the unemployment check requests, people that want unemployment, went down by 12,000 people, which beat estimates. That's all we needed, because see, that's the only thing they were hanging their hat on to say, oh, they did the 50 basis points because the economy's in trouble, because the labor market, no, labor market ain't in trouble no more. So what can you say now? You can't say nothing right now. You can't say nothing. And the Federal Reserve chairman told you that yesterday, but they didn't believe him. Boom, we got proof today in the jobless claims report. Yes, we did. So that solidified it. So guess what happened? Nowhere to go but up. I keep telling you, rates go down, stocks go up. Rates go down, real estate values go up. Why do real estate values go up when rates go down? Because more people are buying real estate. The more people buy real estate, the more demand for real estate, and we got limited supply, prices go up. And what is real estate? Especially if it's a rental property, it's an asset that produces income and it grows in value every year from capital appreciation. Keep telling y'all this. So all I'm telling you right now, get in where you fit in. This is the start. September is the start of something 1 year from now. And I'm going to put this in my calendar. 1 year from now on the same YouTube channel, we're going to have a little come to Jesus talk about these last 12 months. And I'm going to go ahead and I'm going to write down in my notes on my phone, and 12 months from now, we're going to discuss exactly what I said would happen to the stock market. 12 months. Because by that time, we'll have 200 basis points by that point. Or if not 200, about 150 basis point reduction. Because before we get out of this year, we're going to have another 50. One probably in November, and then the last one in December. And that'll close out 24. And then in 25, we're slated to get another 100. So by this time next year, we'll probably be 150 to 175 worth of rates dropped. And we're going to see how the stock market does over this next 12 months with 150 to 200 basis point rate drops. We're going to see how it does. If it's any indication of how it's doing today, it could be a good year. We'll see though, but I'm going to put it in the calendar so that we can touch on this a year from now. Just 1 year from now, we're going to talk about this again. Hopefully my wealth builders and anybody else in here that's looking to build wealth has paid attention today and will go out and make the moves they need to make in order to solidify their future. Don't sit around here, guys, trying to time the market. Please don't. Don't do it. Do not do it. History tells us timing the market is your best approach to building wealth if you're going to use any type of asset. Time in the market. Don't look for shortcuts. Take the long route. It's okay. Take the long route. Don't take no shortcuts. Shortcuts lead to disaster most of the time. Take the long route. Be patient. Be consistent. Be disciplined. And you'll go far. Again, I'm not a financial advisor. I don't play one on YouTube. I'm not one in real life. I have no credentials to tell you to do anything other than I'm giving you my opinion on my YouTube channel. My recommendation is you go out and do your own research. And when I say research, I mean Google. Go out and do your own research on the $2 trillion research lab. Make sure you go ahead and ask ChatGPT to help you out, just to collapse time frames for you. ChatGPT will help you out. And get yourself in a position where you know what you're doing here over the next 12 months. That's all I can tell you, man. I've tried to give you my little 2 cents, and I'll be back tomorrow, give you a few more cents. Every day I'm gonna give you a couple pennies worth of cents. You can take them or leave them. That's up to you. I'm gonna do what I gotta do, which is I gotta go big boy blue chip. I gotta keep buying. This is just beginning. I just walked you through the Mag 7. I don't even know what SPLG and all those boys are doing. Let me check SPLG real quick. SPLG is up by $1.14 today. Let's see what VU is up. Watch this. Let's see what VU is up today. VU is up by $9.19. Let's go see what VGT is up today. VGT is up by $18.25. Y'all remember a week ago, VGT was trading down in like the 540s? Just a week ago. Remember I was telling y'all about VGT? If it got down in the 400, like the 475, under 500, I was going to buy it. And it was in like the 540s, 549, something like that. It's already up to 581 and climbing. I told y'all it was already at 600. And you think this thing going to stop? It ain't going to stop. It ain't going to stop, man. See, the thing about VGT, since it has some of the biggest tech companies in it, I mean, it's a tech stock. I mean, it's a tech ETF. It's an information technology ETF. So Nvidia's in there and a couple other big boy players. And then you got another 300 and something, like 375 companies in there. But this thing, when it clicked, it clicked. It's already up $18, just like that. I can see this thing by the end of the year if things keep going, especially when we get to December after the election, when we really get the bounce. I can see this thing well over $625 a share, well over it. It's a winner. It's a winner. But this is what I'm telling you. So for you people out there, you ain't got to be the expert. You can go to FTEC. You can go to VGT, VOO, SPL. You can go to these ETFs, man, especially VGT and VOO. You can go to these things and just systematically put money in them every single month and do that for 10 years. Lord Jesus. Y'all don't get it, man. But I'm telling you, again, not your financial advisor, just trying to put you on a little game so that you can get your net worth up. You don't got to listen. You ain't got to listen to nothing I got to say. You just keep doing what you're doing. You're going to keep getting what you always got. That's all. Keep doing what you're doing. You're going to continue to get what you've always got. If you want different results, change your activities. All right, man, get down to that description box and click on that Moomoo link. Open up your Moomoo account today. Put $1,000 in there. You're going to get 15 free stocks. You put $100 in there. You're going to get 5 free stocks. And then do me a big favor, send me an email through the website. Let me know you've opened the Moomoo account, you funded it, and then I'm gonna send you some tutorial videos done by the folks at Moomoo to help you learn how to use the app. And then I'm gonna send you my Wealth Transfer Blueprint 1.0 that'll show you everything that I'm buying. So just in case you wanna copy my plan or create your own plan. I'm not a financial advisor, so don't email me, oh, what should I buy? Nope, that's not what I do. Copy the plan. That's all I can tell you. Copy the plan. You know exactly what I do because I'm going to send you the plan. Outside of that, I can't help you with anything else about picking nothing because that's not what I do. I'm not a financial advisor. If you need people to help you pick stuff, go get your financial advisor. That's what they do, and you pay them, and they'll help you pick stuff. I don't do that. What I do is I show you what I'm doing, what has worked for me, and I talk about the overall market, how it's worked for me, and then hopefully you will just follow the blueprint. That's all. Or go pick your own stuff, right? That's the way it works. Also, get over to the website, www.richardfain.net. Do yourself a favor, check out them digital products, grab you a couple. They're great. They'll help build your educational confidence. Therefore, you can execute better. And then join these wealth builders and myself. I've had many of them in here in the live chat today. Thank you to the wealth builders again for stopping by and supporting one of their fellow community members. Thank you so much. Y'all have made it really, really fun for me to be able to just do my thing and not worry about the chat since I know I got support in here handling that for me. So thank you very much. But for you folks that want to join us and maybe you want to be a moderator and help out as a wealth builder, get over to the website, www.richardfain.net. Hit that membership button, hit that join button, and Come join the fastest growing financial community on Patreon. We'd love to have you. We already 1,000+ strong, but guess what? We're gonna get to 2,000 by the end of this year. Because y'all know I'm gonna be on here every single day. Every single day. Every single day. Spreading the good news. And that good news gonna catch a few people. Because they do every day. People join every day. So the good news gonna catch somebody and gonna be like, you know something? Let me go try that thing out. Boom. So we're gonna have about 2,000 people by the end of the year. That's gonna happen. And they're gonna join a wonderful group of people because we already got a wonderful group of people over there. And I'm so proud to be a part of that financial community. I really am. And I want you to try it out. Come try us out. Well, thanks, guys. I appreciate you. I'll be back this afternoon with a little live, not a live stream, but with like a little edited video like I normally try to do. Try to get one of those up in the afternoon around 5 o'clock, 6 o'clock, throw up a little edited content. And I save the live streams for every day in the morning because that's when I'm fresh and feeling good. In the afternoon, you know, I get a little, you know, I want to just chill in the afternoon. So I don't really want to spend an hour and a half no more in the afternoon on the live stream. So I just do them in the mornings. And then in the afternoon, I shoot a little video on my patio or in the house or in the cars. And then I post that later for just a whole different audience of people that kind of watch those. And it's fun, man. I just enjoy what I do. I love what I do. I'm so blessed to be able to have assets that allow me to be able to chase my passions and chase my goals and chase my dreams and live out everything that I want to live out. It's just so nice to be able to have that ability to do that. And I want that for you guys too, but you gotta be willing to pay the price. A lot of y'all have paid the price or are willing to pay the price and are headed to your financial freedom, and that's wonderful. So thank you guys very, very much. Lock it in with a thumbs up before you get out of here. Hopefully this information was helpful. It will help you make some decisions towards your freedom. All of us deserve freedom, guys. None of us deserve to work for somebody for the rest of our life. Go get you some freedom. I've just tried to give you some information to help you do that. Hopefully you take it that way. And if you don't, well, that's just too bad. I did my part, right? All I can do is try to do my part. I can't control what somebody thinks. Lock it in with a thumbs up before you get out of here. Stay strong, stay long. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and we'll catch you guys on the next one. Peace. Nvidia to the moon.